Okay, so we've got a really interesting set of stories that you all have sent in, and we've picked out three that seem to be kind of dominating the headlines right now.
Yeah.
And we're going to take a dive into them. And hopefully by the end of this, you'll have a much clearer understanding of what they mean and what their potential impact could be.
Yeah, and how they're all related.
Right. Yeah,
It's
exactly.
always interesting to see how these seemingly disparate events are actually all connected in some way.
Yeah, so to start, we're seeing some pretty concerning trends with Ethereum.
Yeah.
You know, its price has dropped over 53% since it peaked back in December of 2024.
Right.
That's a pretty big,
That's a huge drop.
yeah.
Yeah, and some analysts are even predicting that it could fall even further, like down to $1,800,
Oh, wow.
which is a level
That's a key.
that a lot of people are watching
Yeah.
as a potential support level, both technically and psychologically.
Right. Yeah. And so what's driving this downward pressure? You know, is
Right.
it just general market fluctuations or is there something more specific going on?
Well, it seems like there's a couple of factors at play here.
Mm,
One is that there's this continued selling pressure from U.S. ETH or ETFs,
right.
the exchange-traded funds that track the price of Ethereum.
Yeah.
So as investors pull their money out of those ETFs, it kind of creates this downward pressure on the price.
Yeah. That makes sense.
Less demand equals lower price.
Okay.
And then, on top of that, we've got these macroeconomic fears, this concern about potential new U.S. import tariffs,
Yeah. Tariffs. Yeah.
which could potentially escalate into a trade war.
Right.
And so in those kind of environments, investors tend to get a little bit more risk averse, and they start moving away from assets that are perceived as riskier, like cryptocurrencies.
Right. Yeah. It's that flight to safety. Right.
Exactly.
Okay, so we've got those two factors, but there's also something else that the analysts at Bitfinex pointed out that I found really interesting.
Yeah.
They said that there's a lack of new projects and developers who are joining the Ethereum network.
Oh, really?
Yeah.
That's
Oh,
interesting.
yeah. And they attribute that to the high operating fees on the Ethereum network,
Oh, I see.
which I think is a really important point.
Mm.
You know, if it's too expensive for developers to build and launch new applications on Ethereum,
Yeah,
then it could kind of stifle innovation and limit its long-term growth potential.
totally. Yeah, it becomes like a self-fulfilling prophecy.
Right.
If the fees are too high, then people don't want to build there. And if people don't want to build there, then the value goes down.
Right.
It just kind of spirals.
And they actually had a pretty striking quote about this. They said,
Oh, yeah?
quote, "A lack of new projects or builders moving to ETH primarily due to high operating fees is likely the principal reason behind the lackluster performance of ETH. We believe that for ETH, $1,800 will be a strong level to watch."
Wow, that's a pretty bold statement.
Yeah, and it makes you think, are those high fees really discouraging development on what's supposed to be this leading platform?
Yeah, it's almost counterintuitive, right?
Yep.
You would think that a leading platform would want to attract developers. But if the fees are too high, it can actually have the opposite effect.
Right,
And it's not just Ethereum that's facing these challenges.
right.
We're seeing a broader market correction happening as these tariff concerns kind of ripple out across all sorts of risk assets.
All right, so it's not just crypto, it's kind of everything.
Exactly. It's like a global risk-off sentiment.
Okay, and that kind of ties into something else we saw, which is that the analysts at Nansen are predicting that Bitcoin could potentially fall to $70,000.
Oh, wow.
Yeah, and they're describing this as like a macro correction within what they believe is still a bull market cycle.
Okay.
But, even Bitcoin, which is often seen as like the bellwether of the crypto market,
Right.
it's not immune to these broader economic concerns.
Yeah, it's definitely not immune.
Okay, so we've got this kind of pervasive sense of uncertainty in the market,
Right.
and crypto investors are also kind of wary of an early bear market cycle. The traditional 4-year pattern in crypto markets is something that a lot of people follow closely,
Yeah,
and any deviation from that can create this feeling of unease.
totally.
All right, so let's switch gears a little bit and talk about something completely different,
Go ahead.
which is those huge Bitcoin transfers that are tied to the Mt. Gox exchange.
Oh, yeah. That's a story that just keeps coming back.
Right. It seems like every few months we hear about another big chunk of Bitcoin moving.
Yeah. And it always has the potential to kind of shake things up.
So just to recap for people who might not remember,
Yeah.
Mt. Gox was this Bitcoin exchange that went bankrupt back in early 2014,
Yeah, one of the first.
and they lost a ton of Bitcoin.
A lot of Bitcoin, yes.
Something like 850,000.
Yeah, it was a huge amount.
And so these recent transfers are basically the trustee who's been overseeing the bankruptcy proceedings.
Right.
They're finally starting to distribute some of that Bitcoin back to the creditors.
Yeah, it's been a long time coming.
Yeah, so we saw two significant transfers recently, one on March 6th for 12,000 Bitcoin,
Okay.
and then another one on March 11th for 11,833 Bitcoin.
Wow.
Yeah, and that March 11th transfer was valued at approximately $926.2 million.
Oh my gosh.
Yeah, so those are some pretty big numbers.
Huge.
And according to firms like Arkham Intelligence and Look on Chain,
Yeah.
the majority of that March 11th transfer, like 11,501 Bitcoin,
Okay.
it went to a new wallet that had never been used before.
Interesting.
But a smaller portion of it, like 332 Bitcoin,
Okay.
it went to what's called a warm wallet.
A warm wallet.
Yeah.
So what's a warm wallet?
So warm wallet is basically a wallet that's connected to the internet as
Okay.
opposed to a cold wallet, which is kept offline.
Right.
And so this movement to a warm wallet has led some analysts, like the folks at Spot on Chain,
Right.
to speculate that these Bitcoin could be used for upcoming creditor repayments
Oh, I see.
because it makes it easier to move the Bitcoin around quickly.
Yeah, that makes sense.
And historically, these kinds of movements by Mt. Gox
Right.
have often preceded distributions to creditors.
Okay.
So the market is watching these transfers very closely
Yeah.
because they're anticipating a potential increase in Bitcoin supply
Right.
as those creditors start receiving their payouts.
Yeah, and that could put some downward pressure on the price.
Yeah, because if a lot of people suddenly have access to this Bitcoin that they've been waiting for years,
Right.
they might be tempted to sell it.
Yeah, especially in this kind of uncertain market environment.
Right, exactly. So it's like this kind of double whammy of bad news. You
Yeah.
know, we've got this general risk-off sentiment in the market,
Yeah.
and then we've got this potential influx of Bitcoin from Mt. Gox.
Right.
And to make matters even worse, we've also got these reports about the U.S. markets declining.
Oh, no.
Yeah, and economists at J.P. Morgan have actually increased the estimated risk of a recession to 40%.
Wow. So it's not looking good.
Yeah, so it's a pretty delicate economic environment right now.
Yeah, very delicate.
Okay, so we've talked about Ethereum, we've talked about Mt. Gox.
Yeah.
Let's move on to our third story,
Okay.
which is this cyber attack on X,
Oh, yeah, that was wild.
Elon Musk's social media platform.
Yeah.
So a hacker group that calls itself Dark Storm.
Dark storm.
They've claimed responsibility for this attack, and Elon Musk himself described it as massive.
Oh, wow.
Yeah. And he even suggested that it required a lot of resources.
So it sounds like it was a pretty sophisticated operation.
Yeah, it definitely wasn't just some kid in their basement.
Right.
And, that kind of raises the question of who's behind this.
Yeah. Could it be a state actor
Possibly, yeah.
or a large organized group?
Yeah, it's hard to say for sure.
So according to data from Down Detector,
Yeah.
there were over 33,000 reported instances of X outages on March 10th.
Wow. So it's a pretty widespread disruption.
Yeah, definitely. And it seems like there might be more to this than just a random cyber attack.
Oh, really? How so?
Yeah.
Well, Elon Musk has actually linked this attack to some other actions that have been taken against his interests.
Like what?
Well, he specifically mentioned protests that were targeting the Department of Government Efficiency.
The Department of Government Efficiency.
Yeah, which,
What is that?
well, it seems like he might have been joking there a little bit.
Oh, okay.
Because, DOGE.
Doge.
Yeah.
Let's see.
But he also mentioned some incidents of vandalism that targeted Tesla stores.
Oh, wow, really?
Yeah, and NBC News actually reported that there have been at least 10 of these incidents.
Wow.
And they seem to be linked to Musk's association with the Trump White House.
Oh, so it's getting political?
Yeah, it definitely seems like there's a political element to this.
That's interesting.
So it seems like Musk is suggesting that this cyber attack is part of a broader pattern of opposition towards him and his various companies.
Yeah, it's like they're trying to send him a message.
Yeah, exactly.
But who's they?
That's the big question, right?
Yeah.
Is this just a bunch of disgruntled individuals, or is there something more organized going on?
Right.
It's hard to say for sure.
And, it's kind of scary to think that someone could just take down a major social media platform like that.
Yeah, it definitely highlights the vulnerability of these online platforms.
Yeah, and how dependent we are on them.
Right.
It's a little bit unsettling.
So as we kind of step back and look at these three stories together,
Yeah.
the trends with Ethereum, the Bitcoin movements from Mt. Gox, and this cyber attack on X,
Right.
it's clear that they're all kind of interconnected in a way.
Totally.
They're all symptoms of this broader shift that's happening.
Yeah, it's like a changing of the guard,
Yeah.
or at least a changing of the landscape.
Right. And so the question is, what does this all mean for the future?
Yeah, that's the big question.
How will these events shape the digital asset space,
Right.
and the broader tech ecosystem.
It's hard to predict, but it's definitely something to keep an eye on.
Yeah, and I think it's important for everyone to be aware of these trends
Totally.
and to understand the potential risks and opportunities that they present.
Yeah, knowledge is power.
Absolutely.
So the more informed we are, the better equipped we'll be to navigate this new landscape.
Right, and that's what we're trying to do here with this deep dive.
Exactly.
To give you the information you need to make informed decision.
And to connect the dots.
Yeah, and to hopefully spark some interesting conversations.
I
So
know.
thanks for joining us for this deep dive,
Yeah, thanks for having me.
and we'll see you next time.
See you later.
Bye.